In this video, you will learn 1. The best and most simple way of trading volatility 75 on the chart. This way of trading it is so simple that even if you're a beginner, you can start trading with this strategy and find a way for yourself to start getting your trading results in the market. And number 2, I'll be teaching you the indicators that we're going to be using for this trading strategy and their individual settings. So I'll be showing you how to set up these indicators to start trading them. And you will also be learning how to identify the key zones that you are going to be trading with this indicator. If you trade the market from just any point in the market, everyone knows that will amount to failure. So if you trade them with the key zone, you will get the key points where you can trade the market from. And you'll be learning that and more in this video. Now let's get to it. Alright guys, the reason why you are seeing these lines on the chart right now is because I'm about to teach you guys a very lazy indicator trading strategy. When I say lazy, I mean this indicator will work everything out for you and you don't need to do all this analysis, drawing lines on your chart. All you need to do is just get the settings right and you will start making money. On the chart here, you will see these three lines here, this blue, green, and red. This is the Bollinger Bands. We call them the Bollinger Bands. And this is not the normal moving average line that you see in the market. These ones are very different. Now, before I show you guys the settings that I use to do this, let me tell you guys how this works. Now, this purple one here is a moving average line, so you don't mix things up. The purple one is the moving average line, and these other three ones are the Bollinger Bands. First of all, let me remove this moving average line so that I will make you understand this properly. Alright, so this Bollinger Band, you can see the difference between the Bollinger Bands and the moving average is that they move in a flow, they move like a river. You know, when you are trading with the moving average line, you will see the lines cross over each other, but this one, they don't cross over each other. They are just flowing and flowing. So you don't even really realize when you're in a downtrend or when you're in an uptrend. So for example, all you see is the market moving in the same way. You will see the red Bollinger Band always below, and you will see the blue one always above, and there will never be a crossover. So you're very confused. And that doesn't take the fact that they work very well in the market. So all we need to do is just to add a moving average line to it to simplify it and understand the trend. So when we have a moving average on it, we can know exactly where the trend is going and if we are to buy or sell. Now, let me show you guys how you can get this Bollinger Band indicator on your chart. So the first thing that you do is that you go down to this indicators tab here, this indicator tab here. You click on it, and if you don't have it already, you click on this F plus. You see this F plus here, click on it and you will see Bollinger Bands. Look at Bollinger Bands here. This is one of the first indicators you will see on this indicators tab. So when you get that, you can move to the settings and all that, but I already have it on the chart here, so let me just show you guys how I set everything. So when you are already there, what you have to do is that you make the period 50. The deviation should be 1.800, just like I did here. The shift should be 1 and apply to close. It should be close. Now the levels, leave that like that, leave the time frames like that. Now the settings, the middle one should be green. Make sure the middle one is green and just keep it to this level here. Keep it to this level, don't move it to this level, just keep it to this level here. And make sure you tick on this line. We have the dots and all of that, just keep it to this line here. Now the upper one should be blue As you can see here, this is blue, so make sure it is blue and it should be a line. The lower one should be red, so you have a red line for that. So when you are done with that, all you have to do is click on save and it will be saved. Now you will have that on your chart exactly like this one. Now if you are starting out with this strategy, just follow what I tell you. Follow the colors that I told you. Some of you would like to customize it to your own color, but for the moment that you're learning this strategy, use this color so that you will be able to understand it the way I'm going to be explaining it. So now when we have these Bollinger Bands, we can trade it, but it will not give us that good direction in the market. And that's the reason why we are going to use the moving average as a mediator to help us to get to understand the trend in the market. So when we have the moving average in the market, we can be able to tell if we are going to be buying or if you're going to be selling, because these Bollinger Bands will not really give us that opportunity. You will see the market going up and down, but you won't know the exact trend that it is flowing with. So because of that, we need a moving average line. And if you want to get the moving average line on your chart, it's still the same thing. All you have to do is go to the indicators tab, click on this F button. You will see the moving average here. Now when you have that, you're going to be using only one moving average. So all you have to do is make the period 200 and the method should be exponential. Then it should be on close, apply to close. The levels, none, time frames, all. The style, just make it a purple color, just like I did here. And just increase that line so that it will be more visible on the chart than the Bollinger Bands. So when you have that already, you click on save and it will be saved. So you will now have this 200 moving average, 200 exponential moving average on your chart. So this is how you should be seeing your chart on MetaTrader 5. If it's not like this, then you have made a mistake and you should go back and correct it. Now, the reason why I like to trade this on Volatility 75 is because among all the volatility indices, Volatility 75 is one of the most volatile among all of them. So if you want to trade Volatility 75, you will be able to make a lot of profit, but you have to be also careful because it moves with a lot of volatility in the market. And when you are trading with this indicator, you put yourself on easy mode. You will be trading the market as though you don't need to do any analysis. You don't need to do all this time frame and all that, or doing top down analysis. You don't need any of that when trading this indicator. All you need is to set the indicator exactly like I told you, and you will follow these instructions that I'm about to give you right now. So what do you do when you have these indicators on your chart already? First of all, you need to understand how the moving average work with the market price data. Right here, we have the moving average moving below the price. That means we are in an uptrend. And then we have the moving average moving above the price. At this point, this is a little downtrend, because after that, the price moved above the moving average, which now opens up for a new uptrend. So look at this again. You see this one. These ones are like choppy price movements here. They go down, they go up, they go down, they go up. But this is the flow of the market here. So when the market is just above the moving average going up, that is a clear trend direction. But when you see this range movements here, just like this one here, is just a distraction. It's a point at which you need to avoid trading the market. So one thing also that you need to understand is that the moving average can give you the direction, but even the Bollinger Bands will also join to give you that direction. Now, you should not make this mistake when you are trading these indicators. First of all, if you see the markets moving in a downtrend, let's say the moving average is now moving in a downtrend, you need to make sure that the green Bollinger Band line and this red one, this green and red, make sure that they have moved below the moving average. The both of them. If only one move above or below, that trend is not yet complete for this trading strategy. Now, look at this point here. So the green one has moved above the moving average line, but we cannot call this a complete uptrend until we see this red line above the moving average line. So when you see this red line above the moving average line and you see the green one above the moving average line together, that means we are in an uptrend. And for a downtrend, when you see the price moving below the moving average line and at the same time you have the green and the red Bollinger Band moving below that moving average line, it means that we have a downtrend. Now, all these points in the market, like these colors of the moving average line, like the blue, green, red, you see the one that we are going to be focused on the more. The one we are going to be focused on the more is the red and the blue Bollinger Bands. And I will tell you exactly why. So when you are trading volatility indices, one thing you have to do is to make sure that you are entering the market at a very good low. That means you are buying very low, and when you sell, you are selling from a very high point in the market. Now, some of you will be like, okay, let me just trade it when it touched the green Bollinger Band, just like these short ones that you can see here. But all those short ones can easily manipulate you. It won't give you a lot of profit when you trade them. So that's why we are going to be avoiding that. So we need to trade with the red or the blue moving average line. And it is very easy to do that. Let me show you an example of that. So right here we have the market moving above the moving average line. You can see these green Bollinger Bands, you can see the red Bollinger Bands, all of them are above the moving average line. Now, I told you guys already that we can't trade anything that is on the green moving average line. We need to see them on the red moving average line. Now, that is not just enough. When we have that, when we have the market touch the red moving average line, we need to look out for something else. This is trading, and if you are not smart with the market, you're going to lose a lot of money in the market. So when you see that, when you see the market touch the red when you see the market touch the red Bollinger Band, it does not give us a direct access to trade the market. We need to see something else, and that is the engulfing candle. So right here we have the engulfing candle here. You see the engulfing candle here while it's still touching the red Bollinger Band. And you see that at this point also it is touching the moving average line. When you see this confluence, although it must not be like this always, but when you see this confluence, you know that you can trade this market reluctantly. Like, it makes it even more stronger than it will be if it was only on the red Bollinger Bands. So when you see an engulfing candle here on the moving average line and also on the red moving average, it is a very good sign for you to enter the trade. I told you before, it must not always happen like this, but when it happens like this, it makes the signal even more stronger. So right now, let's see how we can trade this. So after you see that engulfing candle, you can place your buy limit. You can buy immediately. Place your stop loss below the last low, and your take profit target should be somewhere inside that last price movement. It must not be at the top, because if it's at the top, you are likely going to lose that trade. But when you see it at the middle point here, it is a good area for you to place your take profit target, and the stop loss should be just below the low of that after that engulfing candle. So that is good for that. Now let me show you another example of this trading strategy. So right here we have the market touching the red Bollinger Bands and also touching the moving average line. Like I told you guys before, when you see this, it's a good sign for you to enter a trade and make money. But if you don't see it like this, it is not must. It's not a must that it should be like this. What matters the most is that when the market touch the Bollinger Band line, it should give you an engulfing candle. And if it fails to give you that engulfing candle, you are not supposed to trade it. You have to leave it like that. So it must give you an engulfing candle. So right here we have an engulfing candle after the market touched this Bollinger Band line and the moving average. So we can enter a trade with this. What you have to do now is to make sure that you follow the instruction like I said earlier. So what you do is that when you see the engulfing candle, you enter a trade. Place your stop loss just below the low of that engulfing candle, like the lowest point. Place it below there. Place your take profit target at the middle of the price movement. It should just be at the middle of the price movement or at the top, but it's not a must that you place it at the top. You can just cut your risk. Let's say you make this your first take profit target around this point, and you make this one your second take profit target. So even if you don't hit the top, it will hit the middle point. So like on this setup here, you can see that the middle one was hit. The take profit target in the middle was hit. But now this price movement didn't hit this point immediately. It came down. You can see, look at where it came down to before it start moving up again and finally hit that last take profit target. But it will not always hit that top take profit target all the time. So that's why you have to be careful. Now let me show you guys another example on this trading strategy. So right here we have the moving average. Price is moving below the moving average, and we have the green and the red Bollinger Band line below the moving average. So you guys already know what this means. It means that we can sell. It means that we can sell the market, and we are in a downtrend. So when you have something like this, look at this. You see the market touched the moving average here, but it didn't touch the blue line. And this blue line is for the downtrend. If you are in a downtrend, you want to see the market touch the blue moving average line. And if you are in an uptrend, you want to see the market touch the red moving average line, just like the ones we have traded just right now. And now, since you have that, look at this point here, the market touched the moving average line, but it didn't touch that blue Bollinger Bands line. So because of that, we cannot enter a trade here. Look at this point. Here we have an engulfing candle. You can see we have an engulfing candle here. But the problem is that it didn't touch that Bollinger Band line, this line here. It didn't touch it. So finally, when it touched that line, look at this point here. This is when it finally touched the line, and it gave us an engulfing candle. And with this engulfing candle, we can enter a trade and place our TP like somewhere around the middle point of the market, and we get to make our profits. So guys, make sure that if you are in a downtrend, the Bollinger Bands are moving below the moving average line, and the price is moving below the moving average line at the same time. Remember what I told you guys. If you are in a downtrend, your point of reference, your line, this line is your guide. This is the line that you should be expecting to trade from, the blue line. And if you are in an uptrend, you need the red line to trade with. So it's very easy, guys. If you take your time to learn this on the charts, you will see much difference in your trading. And I told you guys, this is a lazy trading strategy. So you just have to take a little time in the market every day. look for opportunities and trade it and rest. You can do this on different assets, but I tell you guys, it works better on volatility 75 index. So take your time to back test it on the chart and see if it's the right one for you. As you can see, it is working efficiently in the market. So guys, if you are new to Deriv synthetic trading, please use the link in the description box below. You get a bonus from our broker as a first time customer. And if you are watching us for the first time, subscribe to this channel, like this video, drop a comment, tell me what you want to see next from this channel, and I'll be explaining that in the future. Now, if you also want to get trading signals from me directly, the link to do that is in the description box below. We are trading the market every single day. I'm giving out signals every single day in the market. Alright guys, I will see you guys in the next one.